Welcome to the webinar today, and we're going to talk about short-term trades, range-bound as well as a bit directional. And Mark Fenton, who works with me for a long time, will be taking one piece of it, and he's going to be working on maybe a directional example of short-term trades. And when I'm looking at short-term trades, either they expire today, same day, or maybe in one day. I guess with the directional, you could even throw it 2 or 3 days or something like that. But generally, the range bound, I'll be looking for today, same day or one day. But I guess with the directional, maybe Mark would probably open it up till at least this week, right? 2, 3, 4 days, something like that. You agree, Mark?
Yes, with directional, sometimes you might have to give it a couple days to go where you think it's going.
All right. Yeah. So good. So I'll have Mark start off with that. This short-term class is going to start a week from today. It'll be a 3-week class going Mondays and Wednesdays at 2 Eastern for an hour. It'll be, I believe the cost will be $297. Is that right, Johnny, for this class? If I've got my, so 3 weeks starting next Monday. And that'll be $297. It'll go an hour each class. Mark and I will be doing that. And that's going to focus on short-term trades. Again, for the range-bound trades, it'll be same day or one day. And for the, and I guess I could go 2 day, but very short-term. And for the directional, go to a little bit, it could go 3 days or something like that, 3 or 4 days, same week. So looking forward to that. We have not done a short-term class, and so I'm excited about it. I know there's a lot of interest in short-term trades, and I'll go over that a little more, why people get excited about it. And we will go from there. Let's see, what else did I want to mention there? Excuse me. All right. Well, let's let Mark will share with you, I think, a little more of a directional trade, and then I'll give a range bound as we get into this short-term trades. And yeah, as John Crow said, short-term trades with VIX at 30, it's a more volatile market, but there's always opportunities. And I think how you look at it, how you place them. And as I'll be getting into short-term range-bound trades, again, what do you think? And then I'll hand it off to Mark. This is a question for the folks that are watching here. What do you think is the number one reason, the biggest reason same day or one day range-bound trades are extremely appealing? What do you think is, for the folk out there, what do you think is the number one reason why, maybe I guess that I think they're a very viable strategy? Return on capital, fast gratification, all of that is good. Someone might have said it, but the biggest thing is someone just said it, there's no gap risk. So there's no overnight risk. So you could play every day. There's weeklies every day. But if I come in the morning and I don't want to play, I don't have to. And I don't go overnight. Whether it's a same day trade, obviously you don't go overnight. But even if it's a one-day trade, if I put on a one-day trade, meaning today is Monday, and I'm going to get out of it on Tuesday, a Tuesday expiration, I could still be out of it by tonight. So that to me is very intriguing. Why? Number one, right? It's not the, is the time decay good? Yes. Is the high volatility good? It could be. Is the fast gratification, return on capital, less time in the, yeah. But from someone who's very always concerned about risk, it's the no gap, right? So obviously you still have risk of being in a trade for 5 hours or 6 hours or 7 hours. But to eliminate that gap risk is huge, right? So, the only way you're going to lose that much more than you make on a particular trade in these situations, most of the time is going to be because of bad risk management, that you're just not disciplined and keeping up on it, right? So anyways, with that being said, let me turn the reins over to Mark. Mark will talk a little bit on an idea he had, and then I'll talk about range bound a little bit. So Mark on the directional, Dan on range bound today. Mark, go ahead. Thank you.
All right, Dan. Yes. And as Dan said, the directional, sometimes we'll take a day, maybe even a few days to get those. But it's a really fun way to play your opinions. And I'm going to show you just one way I like to do it today, folks. I want to say up front, there's a lot of ways to play direction.
Mark, the last thing I want
to
say there is just, and when we do these trades during the class for the next 3 weeks, every trade that we come up with, as we're teaching, so to be a combination of teaching and then the practical thing. So we'll put on live trades, everything, at every class we'll put on live trades, because that's really where the learning gets in the bloodstream more. And so we'll do that. So that I think it'll be a very practical class. You'll get the learning, the understanding, but the practical experience will be doing these trades. So, all right, back to Mark.
All right. So there's, like I said, a lot of different ways you can play direction. I'm going to show you one of the ways I like to do it today. And you see here in front of you is a SPY chart, SPY, the ETF for the SPX that trades at about the 10th the size. So you can see we've tried to punch through the 380 area, similar to 3,800 area over on the SPX. We failed before, been up there a few times, tried again here, didn't make it. Now we're beating at the door again. But this week, many of you probably know, we have a lot of earnings coming out, big tech earnings. I think the first one's Wednesday, before or after market, I can't remember. But then Thursday, there'll be a bunch of them, and they're just playing out Amazon, Meta, Google, Apple, all those. So, and there's certainly a way to play those. But what about the broader market? What if you thought, hey, just like a lot of analysts do, they think that the earnings are going to determine where the market heads. If they like it, that'll go up. If they don't, it won't. And I think the general sentiment is they expect the market to go up. It seems that's what analysts are thinking the earnings are going to show them. So if you thought that too, if you thought, hey, we're going to trend up this week, here's an idea for a trade. And this is put in this Wednesday's expiration. And it's a butterfly. And as you can see, it's very directional. It's only 42 cents. Heck, we could give ourselves even more room. It's only $3 wide. So you could make it $5 wide. Let's see how much that changes the price. The wider it is, the more it costs. You see now it's $1.13, but it also gives you more room to roam. And in this case, maybe this would be better because you would have, if it decides to stay here between now and Wednesday, you look at the theta decay you got. This is about just over $100 trade. You got $36 a day in theta. So there's an excellent chance that if we just move around in here, you probably could be out of this tomorrow at 10%, if that's what you wanted. Now, and then if it does go down on you, you can just exit it. That loss won't be very large at all. So that's what I'd recommend. If we happen to go back down to 375, just close the trade. You tried it, you cut your loss in a big hurry, no worries. And tomorrow you'll be down even less if we went down here, and Wednesday even less. And that brings to mind going into Wednesday with this. You can go into expiration day with these. I don't do it with my normal non-directional trades that maybe you put on 30 days ahead. I don't normally get those much past Monday or Tuesday of the week of expiration. But with these small directional plays, I'm more comfortable with it because what is the most amount you could even lose? Well, the most amount you could possibly lose is what you paid for it, right? in this case, just over $100 if something really went haywire between now and Wednesday. But if you just expect it, and this is your opinion, to just trend up, then I think this is a viable fly because you still have a little room to the downside. And you even got room if it goes up even further than you thought. And just try to get out of this thing at 10, 20% profit, whichever you choose. If you want, you're doing it really small. If you want to try to get into Wednesday with it, sometimes I do that and try to get 30 or 40% because once again, the risk is small. As long as you stay small, you start doing 10 contracts, well, then it's not so small. But the risk around here would be pretty small, even at a couple of contracts. So this is what we call a time bomb fly. And it is one of my favorite ways to play direction in any vehicle, whether it's for earnings or whatever. In this case, it's a SPY because there's a lot of thinking that the market could go up this week. And it's probably safe that it won't go down too much before those big earnings come out. I think mainly Thursday, if I'm not mistaken. Let's see. So yeah, the 27th on Amazon, 25th. So a lot, and that's after the market. So you'll be, so Meta was the 20th. Google's tomorrow after the market. All right. Well, that'd be about the only big one that would be out before this was even over, but that just might even propel you up, you know, if they have good news or whatever. Any questions on that, anybody? All right. Well, there's a chat there. Somebody is M at Microsoft tomorrow. Oh, they're all coming out, aren't they? We are getting all these different. Would you use SPX? You could, if you want to use SPX, Marcos, you can. I was just showing it in an even cheaper fashion, doing it on something 1/10 the size. But if you feel comfortable with what you're risking in SPX, sure, you could do a directional fly. And if it's, you know, a little steeper on price, you can always bring the wings in. Yeah, well, IV, you know, if IV comes out, this could be good for the fly too. It is short Vega. Would it also be good to do an iron condor here? Well, that's not really my thing for a directional play, Chet, because they're non-directional, right? And I'm talking about directional plays today. Whenever you want to pick a direction, in this case, the feeling being that the SPX will go up between now and Wednesday, or the SPY will go up between now and Wednesday. So that's what we're trying to express with this. Okay. That's what I got there, Dano. If you're around.
Switch over. Thank you, Mark.
All right. Have a good one.
Now, this is more range bound, right? Now, technically, if you look at an SPX chart, how many think we're in a range bound market? How many think we're not? Yes or no? I'm not looking over the last year or 6 months, but you know, reality is, even though there's some big candles and some big movement, yeah, I mean, if you look at the last like month, right, we are range bound. Now you could say, Dan, there's still some big candles, but you know, it really, with that perspective, it's range bound. But again, what's unique when we get into this world of same day or one day, obviously it's already 1:17 Central Time. So there's only a couple hours left. So if I was going to do an iron condor, would I do it with 2 hours left in the day? Probably. Yes or no? Is that enough time? Probably. I mean, I could. I generally would like to do these. I mean, not that you can't. Let's take a look at that. Generally, I would do these maybe a little bit earlier in the day, right? Let's just see if it gives us much. So let's just say, for example, let's try to construct a 0 day. So that let's say that if it expires today, again, we only have 2 hours left in trading, technically a little bit less. I have it's about 1:17 Central. SPX stops trading at 3:15. So let's just say if we were to construct a iron condor right now, October 24th, Okay. And let me just see here. And let's just say I start out, there's many different ways to construct this, but let's say I look at maybe a, 1 second, maybe might have to go a little higher than a 10 delta to pick my strikes, because let me just see what looks. Let's see what makes sense here. So if I want to sell, let's sell a 37.65 put, which would be about an 11 delta. How many are used to the concept of picking a strike that you want to sell based on delta? Yes or no, I'm comfortable with that, or no, I don't know what the heck that means. Some aren't. So it's just saying, if I'm picking the 37.65 puts that expire today, they have a 12 delta. What does that mean? It means there's only a 12% probability, or 11, the delta is changing, 11 or 12% probability that we're going to finish under 37.65 by the end of the day, right? That's what it means, right? But as you get, whereas and that's going for around $1.20. Now, if I go to say, Dan, how about selling the 37.80s? I get over $4. Well, probability is only 34% or 33 that we're going to finish under 37.80 by the end of the day. So if I go to like a 12 delta 37.65, so I'm going to sell the 37.65. And then I'm going to buy, if you want to do a smaller trade, I'd do 5 wide, but I'll do 10 wide, right? That'll make it, if I do it 5 wide iron condor, it'd probably be a $300-400 trade. If I do a 10 wide iron condor, the width of the credit spreads, probably an $800-900 trade. So I'm going to buy my puts at 37.55. So that's 10 wide. So is everybody with me so far? I sold the 37.65 puts. It has a delta of, now it's 13. I bought the 37.55s. Now I go to the calls. If I go to the calls, and let me see here. And I look for a delta, a 12 delta would be the 38.10s. 12 delta would be the 38.10s. So there's only a 12% probability in the next less than 2 hours we'll finish over 38.10. Sure, it could happen, but the probabilities aren't that high. And I'm going to buy the 38.20s. So you can see, does everybody see this? So this is the trade. And you can see we're selling the 38.10. And we're selling the 37.65, the puts. And the current underlying is 37.88. And we've got, what, a minute, hour, 8 minutes under 2 hours, right? So an hour and 52 minutes. Now, we're relatively delta neutral. The theta is great. This trade, if we do it for, let's say, $1.40, and that changes, right? Let's say $1.40. If we do it for $1.40 credit, what's our margin or risk? If we do it for $1.40 credit, what's our margin or risk? Thank you, $860. And this is our theta for the day it expires today. So we would be out of this in the next hour, hour and a half, right? Now, what are the positives of putting this trade on with 2 hours to go? What are the positives? No overnight risk. The theta, you're making your money quickly, and those are all given. But what are the real life positives of this trade? Here's the real life positive of this trade. Is there any significant news coming out in the next 2 hours before the market closes? Is there any earnings coming out before the market closes? So what is your biggest concern right now to put this on? Or I said, what would be my biggest concern? I mean, obviously when we look at the range for today, we're 37.41, 37.96. We've got over 50-point range. We're near the high of the day. The biggest risk is the SPX going to keep running up the next hour and a half? Do you agree? But, you could think, how many are thinking, well, all these big earnings are coming out this week. Yeah, we're up a little bit, but until some of the earnings start coming out in the next few days, probably not going to go too crazy today. Right? So again, when we're talking about the success of this iron condor, do we care what happens in 2 hours? In 2 hours, if 42 companies go bankrupt, does that affect this trade? Not much. It doesn't, right? This trade is done in the next hour and a half. So no news after an hour and a half have any effect on this. Agree? So for me, if you said, Dan, would you put this trade on? I probably would. If I can get $1.40 for this, or $1.40, but maybe a little. But again, just now, because we're starting to go up a little more as we speak, I might tweak it. Dan, what do you mean tweak it? Well, these deltas change really quick, right? So I'd probably go up to the 38 to get comparable deltas to keep this centered. If I was going to put this on this second, 38.15, 38.25, maybe come up a little bit on the puts because I want to keep this centered. And we also look at butterflies and calendars to do these. So I want to be pretty neutral when I start. Now this is $1.25. These credits are going to come down pretty quick as we start getting into the day more. That's why I'd rather do it generally maybe around 10 Central. But anyways, so we're going to try to teach during the class is, do we adjust these if they go against us? Do we not? What would be a game plan for these? What are the considerations, news, and everything? So we'll give you a checklist, kind of a template for these. This one particularly wouldn't be horrible to put on. Wouldn't be. I wouldn't mind. I mean, I'm pretty centered on these. But this is the type. I like these with 2 hours or less. But it's all depending, right? I mean, we're always going to like on these trades the theta that you can make money in one day. But to me, I'm always looking at, well, what do I think is going on in the next 2 hours? So right now, I'm not dealing with any news the next 2 hours. I'm not really dealing with any earnings per se. But the only thing that's looking in my mind is, SPX is starting to chug up a little bit. We're not at the highs of the day, but, are we going to stay under our short, right? So, so for those who are interested in short-term trades, I would suggest this class. So we start Monday, and you kind of get the bang for the buck. Mark will probably focus more, just because it'd be good to separate it, into the directional and speculative short-term trades, right? That might be 1 to 4 days. And I'll focus on the range-bound trades that are either going to expire today or the next day. And I'll give you an entire risk management plan, because I think these trades are good, but it's just the risk management, right? I think these trades are fun. I think you want to be, I would trade less capital than I would a 30-day duration trade. The class will start at 2 Eastern, 1 Central, starting next Monday. It'll go Monday and Wednesday for 3 weeks. If you can't make a class, you're working or you're busy, it'll be archived. If we do any, when we do the live trades during the class, they'll be texted out to you or emailed. So even if you're not able to attend live, the trades we put on will be sent to you relatively quickly. Could you ladder these in the day up to your? Yeah, you can ladder in or scale in. It would be another word. I would do these if VIX is lower, higher. I don't think that matters. Volatility, does implied volatility mean much on a 2 to 3, 4 hour trade? Yes or no? Is there that much of a volatility component on it? No. The things that matter most are, news, what's going on that day. But it all comes down to risk management, right? And so anyways, I just wanted to let you know what we're up to. This will be the first class we've ever done on a short-term trade. So whether your cup of tea is a little more directional or range bound, we'll have a little of each, and we'll do these live to work on the craft together. And that will be starting this coming Monday. SPX stop for each day goes till 3:15 Central, 4:15 Eastern. So thanks for showing up, everybody. Appreciate it. And you can go to our website if you'd like to sign up. Again, it's 3 weeks for $297, and we'll see you Monday. Thanks, everybody. Appreciate it.